All right, my great people, good morning, afternoon, wherever you're connected from. A very quick one to you. If you are on this community, it's very important. Now, why I kept emphasizing that you need to settle down to maximize the opportunity available in this space is that we have so much to give. Trust me, we have so much to give. Yes, Plan B is an ecosystem, but this caption I brought out was born out of deeper thinking, thought, research, and all of this. I've seen a lot happening. Of course, a lot have always approached me, set up this great coin and all of that, but I don't hardly move. But when I saw the dimension at which things were going, trust me, this Plan B Express Cash Flow Solution Group, where it's going is bigger. So just joke with it. And you have gone through those things I said they are going to be needed. It's not to compound your problem, it's to simplify your problem. Now, I've told you that different areas which you must take note are three things: passive income, active income, and residual income. Now, you realize that in all of these, not as if you will not do anything. Example, I was talking about stock. So in your stock trading and crypto spot trading, you are going to be trading them the same strategy, the same style. Now, one of the lovely aspects of the crypto own, you can select some coins. But let me start with stock. Now, I called out this stock last week. All right, I called out this stock last week or last 2 weeks or something. But the point is that why I need to teach you basics so that when we're talking about stock, you are looking at your time frame should be between maybe weekly, all right? Weekly, of course, normally weekly, monthly, and all of that. Look at this stock. This is a US stock. Look at this stock. It's a US stock. Now, an all-time high had been $42. That should be about how many years ago? In 2021. And the stock nosedive. This is weekly, so that you can see in a larger perspective. Nosedive so massively, right? Until it was able to come out in 2022. Since 2022, it has been an uptrend. So look at it. So I don't want to teach complex concept. Still like weekly. Look at the market when it recovered, then we have a swing high, okay? And all of these are internal because of weekly. This is another swing high, and then a swing low. This is sweep of liquidity because internal structure. So swept liquidity, and we had a bounce that's from about $7. Now, is it bad? Because when we talk about stock, you can buy and hold and then trade some. Look at it on weekly, for instance, when you are buying from here, you're actually targeting here because this is a swing high. If possible, the market should get there eventually. Do you understand? And this is, look at it. Now, if I look at this stock from here, so when it's sweep liquidity, this is weekly, and this is a pin bar, so the recovery was upcoming. Luckily, you didn't even enter on time, but because if it's weekly, you'll have gone to 4 hours to look at the market properly. Now, so if you look at it now, let me just use an example. On a weekly, so you already hear a low. When this low, right? When this low, now this is the low was swept. And so if we look at it, let's take and just mark this point. All right, so let me go to 4 hours. All right, so if you look at it on 4 hours, remember this is a high you are targeting. This is a weekly high. You get it now. That here is a weekly high. Now this is, we're talking of stock here. So this is sell side liquidity that was swept. Why I come this way is this. Because the moment you see market down back to that, so sell side liquidity, you're targeting to see when to find an entry. So I just don't want to do all the abracadabra. But in the market, this is a low, this is a high, and then the market return back to take another new low. And your entry, because this is stock, so you don't need to over refine. This is a power of 3. So your entry is actually this place. But of course, the fundamentals too we get is additional opportunity. Now, even when you just want to hold the stock for a few weeks or a few days, you're going to see something now. Now, if we are targeting, this is a swing high, targeting that point here. This is stock for that matter. How many percent is this? 62%. Let's look at how many days it took. That's from November 2023 first to December 14. So that's a month plus. A month plus, in fact, that was a very good beginning of the month. A month plus, you have done 62%, right? Not stressing yourself. That's why I say passive. You just buy and hold it for the next this, but I will be giving us direction, of course. Yeah. So you're just buying and holding this stock for that matter. Do you get it now? So imagine as we are still holding, of course, we see the market was still maintaining momentum. If we return back to that weekly, see what's going to happen. I want us to explore the financial market as if it's not the market that people are shouting about. Do you understand? I want us to explore it as if it's not the market people are shouting about. So if you now expand, you have entered in lower time frame. So you don't want to stay on lower time frame. Look at it. When it broke, it still continued, right? But that was your target ordinarily. So even if you don't place a sell, you are targeting that. But when you get there, the market went up. You see that? And the market went up. This is 99, so almost 100%. We're talking of weekly here. This is not daily. So even when this trade is still on here, this is 102%. Oh, yes, 102%. Okay, 102%. Within 1 to 2 months, I want to build millionaires. I'm telling you, in dollars, please, work with me and let God help us together. So it's not a mouth making. So look at it. So this stock, I've done that in 2023. You right? Now, so again, the market now pull back. So this pullback, this is another break of structure. So after you get this, so even on weekly, see the power of 3 play out. This is 1 week. This is the second week. And so power 3 playing out. So if this power 3 playing out, this is weekly. Now you are going to go to 4 hours. You're going to go to 4 hours. So trading stock, we use weekly, daily 4 hours, probably 1 hour sometime, but not all the time. So if I go to 4 hours, let's go. But remember that you are not, this is not future trading. So if it were future trading, that's where you'll be looking for a sell. But there are some platform you trade stock now on in the CFDs and all of that. So you probably want to trade that too. So, but I don't think we're going to have that time to that extent. We're not going to have that time. The reason is that we can't trade everything. So we only trade stock on spot, that is buy to hold. And at the same time, outside the buy to hold, we will buy and sell, buy low, sell high. So if we take this, let's take what we call Fibonacci retracement. I've done all of this in a training, so please take advantage of it to go through them. So now this is this. We're taking Fibonacci retracement. Why do you take this Fibonacci retracement? To know to what extent is it going to pull back before you find your own entry. Are you following me now? All right. Because this is the same thing probably you can do here. This is the lowest, and this is the swing high. The same thing can be done. So that's why I call it passive. You don't need to bother yourself. It can be weekly close, weekly open. Look at it. Can you see now? It came to, and my target is usually from 50 to 75. Okay? From 50 to 75. And guess what? Even while the market was doing in between, let me show you something. Because our entry market model is simple. Swing point. Look at it here. Swing point. Even if you don't know anything, remember this these days that Felix told us about what? Swing point. This is a swing point. Are you seeing it? Power of three. Accumulation, manipulation, then. So even when you come late, you are entering here and then leave the stock to run, right? But it's just that you want it to take out this. You didn't take it out, no problem. Even if you don't sell the stock, you still have it. But if you are selling it, good and fine. You just want to enter at the appropriate time. And we have the same thing, run up to this. So if this is a swing low, and then this is swing low, then as the market got up and started dialing, this is a power of three to just that was too bogus. So I like the one that is firm. Now, but if you take Fibonacci retracement from here to this place, see what happened. You got the entry, all of this probably too dicey. And I always tell people, look for that perfect thing. So it didn't form here. All of this can confuse you. The only thing is that you're seeing that it has come to your model. But sometime if you want to do on that weekly, you go to lower time frame. There's some market, if you go to lower time frame, will confuse you the more. Look at the power of three here. This is one, and this is two and three. So maybe you're always entering at the close of three. For you to see, that means you waited for this market, even when it come to your entry, this one rally back, return. So this like you have missed this trade, no problem. Then it return back and give you your entry model. So let's say you entered here. So entering from here, I want to see clarity of this market. You are targeting up here. So targeting up here is 35%. For how many weeks? That is 30th of May. Yeah, that's the 30th of May to July. So it took about a few months. May, June, July, 2, 3 months. 35, 38%. So you are not gambling. All right? You are not what? Gambling. I'm just trying to simplify trading for us. So you can see trading stock, you can make hell of money. I'll have to be doing this again and again for everybody to learn. Now, because all of these were internal structure, all of these were internal structure. Are you getting it now? So that means I'm going to be working with this external because this is the one that was now taken from this place. So I'm going to be working with this external here to this point. So if you take the Fibonacci ordinarily from here to this place, so you can see the market travel back to this point, and then you're able to find. So if you have find this, and this is a pin bar, close of this pin bar is actually your entry. So if you go back to 4 hours was where you're able to refine a better entry. Do you understand? Just like here too, if you go to 4 hours, you can find a refined entry. That makes a lot of sense. All right. So the market has traveled and did well. That's one of the lovely things you have gotten. So here we have this. So the market now, this is a low and this is a high. Are you following? Now, following that direction, you now take your Fibonacci from this swing low to this swing high. And look at the market. You know, all this internal and external you did here, you make money, but you have to look at it. The market sweep and then, broke a new structure. So you can't work with this. Other point. Now you have other point to look at. We have a fair value gap. We have a breaker block. Okay. So then the market traveled down. So when the market is coming down, you are not bothered. So because you look at how would this market, for instance, let's say if you draw from here, okay, let's draw from there first. Because this is not a rusting, and that's why I call it passive. It's a thing you just come to do and then review and all of that. So look at it now. You expect the market from here to here, and it didn't play out. So you allow it to run. Because if you check, did you find any point? Okay, yes, this was forming part of 3. So probably if you mark it, let's say if you mark it, so let me go to 4 hours. Yeah, probably you will be stopped out of this place. Something must have happened. Because if you measured your 4 hours here, there's a power of 3 that played out there. You see that? Oh, yes, it actually did. See the power of 3 here. So you definitely will have entered here and you will be targeting. So that means this trade. Now, let me tell you one of the advantage of trading stock. You see this place, when you entered here, you definitely will be targeting up here. So that means you are targeting when the market is going to give you about 57% or so. So, but it never did. Rather, it came down the more. So it's not a problem. You re-strategize. You know, this is stock, so you don't get patterned for whatever. So you what? You re-strategize for the external because it has swept this is a liquidity. So it swept this liquidity and bounce. Okay, no problem. This liquidity has been swept and bounce. That means you are taking your Fibonacci from this swing low to this swing high. So now to this swing high, this is now, you can see your perfect entry. So you mark it, go to your 4 hours. The market was doing. Now, you know you are targeting here. So sometimes you don't need to be in a haste. Sometimes, depending on, and that's why I call the power of DCA. Remember, if it's like few days trading and all of that. So the same strategy you adopt for, maybe was to increase uh your swing to 10% and your scalping to it should be 4%. So your swing to be minimum 10%. So if you swing minimum 10%, so you can look at it here, let's say from here. So targeting 10% of your swing. Oh, this is 40%, ladies and gentlemen. The only thing is that if you're targeting here, that's about 95%. So that means you definitely will have find some trade because this is your dealing range here to here. This is a swing high and a swing low. So your dealing range, you want the market to return back to this point, and that's why you bought here. So, but why the market was now moving, it creates another internal and external structure. And where is that internal structure? He now come here and start coming down. So that means you're going to find your where to what extent will this market reverse to before going up? Look at this is the high. Came back to that your 75. So you now want to go back to 4 hours to find a proper entry. But you know, you still have a position here that you're targeting up here. So this is like addition. Now, this journey started 2025 January. You can see stock is different from, so 2025 January. So if you look at 2025 January, so how many percent from 25 so to October, that's about 121%. That's massive, right? For 10 months, 100% plus. This is stock. Now, by the time you are now doing like the scalping within it, you have done a lot of massive profit. So that's the bad that if you go back to daily time frame, that's another time frame you probably can look at too to be getting your trade. But I think stock is making more sense on, trading it on a higher time frame, while spill down to a lower time frame. We already know that the market is still an uptrend, but it's rabble up here. This is sweep of liquidity up here because this is a double top. All right, and the market continued to rally down. This is what happened. On daily time frame, we have this kind of head and shoulder pattern, but that's not the problem. The issue here is this market has come down on a daily time frame and it has taken out a liquidity. Look at it here, this line. This is a break of structure. It's called a sweep of liquidity. Then we take out buy side liquidity too, and then you expect the market to come down. That is sweep of liquidity, break of structure, reverse to institutional reference point. This is a powerful entry model. How? The market, right, was pulling back. As a pullback, look at it, it was here, right? All right. This is a sweep of liquidity. So like this is market structure shift. Because this is a break of structure. Then the market came down. The low that created this high was swept. The low that broke this high, this is the low that brought about this break. So this is a recent swing high, and this is a recent swing low. So ordinarily, if the market should continue, what we want to do is to measure from here to here. Wherever you see the 50 to 75% retracement, you're finding an entry. But in this case, the market broke down here, swept the liquidity. Now, what happened? The next thing that happened was that the market rally up and then again break structure. That means new structure break. Here is a buy side liquidity. Here was a sell side liquidity. So the market came, swept the sell side liquidity. You expect it to take out the buy side liquidity. Now, if you take out the buy side liquidity, having created this is another block. So it's the same thing here. It's another block because the last bearish candle before the massive move. So what you expect is that it has taken out this. So you expect the market to return back to the other block, fair value gap, or what we call institutional reference point. Do you get it? Institutional reference point. So if I'm going to take my Fibonacci retracement ordinarily from this swing low to this swing high, and it has come to 50%, though the better it come down to like 61, 75, it make more sense. You can see now to 61, there is what we call a demand zone in that point. So, but it didn't do that, so no problem. Now, on a daily time frame, the market has come down to this point. Now, there is what we call an overlap. What's the overlap? There is a support. Here was a resistance before. You rule it out to see forming a support. So that means, in fact, some that bought that last week or the other week, I think I was even busy, were not supposed to buy. Because look at it. Power of three formed here. The stock sold down, but got supported here. Fine and good. So by the time I go to like 1 hour, will give me a perfect entry. That will have made some good money. From, I think I did from that 17 something. So if you bought from that, that's about 6%. That has covered your scalping ordinarily. So if I go here now to mark this point, right? Let's see. So let me go to 1 hour. The internal structure of 1 hour of daily time frame is 1 hour. So now let's look at it inwardly. This is the support we drew. So the market has traveled to it. Beg your pardon. All right. So now see what will happen on 1 hour. So you will have been able to find a very perfect entry. And I think this stock will still sell back again because you can see it's creating a kind of resistance here. But this is the point. Let's take out this. Now, there wasn't any good perfect entry for us here because this is not proper power of three. We didn't find anyone here. Maybe because of just a support that could have find an entry. Let's probably check in 30 minutes. Now, okay, note that the essence of like going to lower time frame is to find an entry. Now, let me show you now. What will form my entry here now may not necessarily be part of three. What will form my entry here is simple. What's that thing that will form my entry? This is a low and this is a high. You understand? So if this is a low, this is a high. So the market has broken structure. What I expect is a pullback into point of interest. This is fair value gap or whatever. So if I go to 15 minutes, because if it's going to be a day trade, you have to change. All right. Do you understand? If it's going to be a day or intraday, not the normal of that our holding portfolio. So that means when the market actually traveled here, that was December 12th. So here we come a low, here is a high. Now, so if this is a high, when the market was traveling down, you can take your fib level. Yeah, there are two ways of entering using your fib retracement level, but that one is not as secure as when the market structure actually shifted. You see that? So the market now the market has traveled to your point, your area of focus, and we have power of three here. So this is the perfect entry. There's a power of three here. At the close of that candle, some wait for, more conservative. So the stop loss, this is stock, so you don't need to be afraid so much. Your stop loss is here. So your stop loss of this stock is how many percent? So let's make this is 1 point something percent, ladies and gentlemen. So just to take it, let's say 1% or whatever is what you set to lose. And so now, I told you that our spot on stock, you'll be targeting minimum of 4%. So if you're targeting 4%, you have done it already. Oh my word. You're able to pray for me for grace because I have a lot to give to the house, but your cooperation will help me more. So if you're using these two, you probably were targeting maybe 4% minimum, right? But if you look at the market, this is swing high. You are targeting here. So if you're targeting there, ladies and gentlemen, that's about 11%. All right. That's about 11% to or profit. So that's about one ratio, 7 point something. All right, leverage. But let's see the market travel, and it actually gave us about 8%. So maybe we should be making 5, 6, 7%, but this is still going, right? So it will resume next week. How will it resume next week? Now, the second entry model will be the market create a high, it came down, you wait for the structure to be broken. And once the structure is broken, then you expect the market to return back to this institutional reference point. This is a fair value gap. This is another block. Well, we saw the market actually return back to that support again. So you can see why marking all of those points. So if you look at it inwardly, my entry model, I struggle to get it here because this is my entry model. I struggle to get it here, irrespective of where you entered from, because this is stock, so it doesn't travel like crypto. So now can still go here. 2% is my stop loss. So if I'm even targeting one ratio, two risk reward, it's already done here, somewhere here. So that will have been 5% plus, which is cool. Do you understand? All right. So you're here, target up here, and then allow the market to run. Okay. Now, so the only thing is that depending on the platform you use, now, if some of this stock are available on Bybit, that makes sense. We can set our stop loss on the trader fee. You can see I have a lot of job to do for us because I have to still teach us how to use Bybit for stock trading. So, but this is how it is. Now, it is less risky trading stock, right? But you don't just leave money on the table on stock market. You maximize it, you collect the money as it's available. Do you understand? So that's what it is, right? So if you look at it now, if I take from this swing low to this swing high, the market actually drifted. This is power of three, formed powerfully, right? So because if I'm taking my Fibonacci retracement level from here to this point, that's very perfect. Makes sense. And now that means you're expecting this market to travel, break the structure, or reject it at this point. Now, most time, my target used to be this here and this here. So if that's going to happen, that will have been from here, power of three. This is weekly, okay? So power of three form after the close. Then to this point, going to be giving 75, 73% here, 55%. To the high, it's going to be 38%. And that will take like 1, 2, 3, 4, 5, 6, 7, maybe up to 2 months or 3 months and all of that. Are you following, please? So you can't tell me how do I go about my stock trading. So let's say, look at it. If I review some of those stock, so you don't just buy stock blindly. You buy stock meticulously. You can see Nvidia was showing a strong buy. Look at it. Look at Nvidia, strong buy. Which stock is this one? So sometimes I want to look for stock that their prices are very small, low gems. Because if the price are too big, you are not going to get the type of profit you're supposed to be getting. This one is 114. It's a little bit small, but too big, somehow big. I want to check. So I just show buy. Which one is this? Bank of American Corporation. BAC. Excuse me. I want to see a gem stock. Ah, this was given last week. Cisco system. Just buy. Was given, I'll show us this one. Okay. Coca-Cola Company, $70. Let's look at it. And this one, 265. No, don't want a strong buy, but sorry. 24 buy. I want looking for a strong buy. Anyway, I will still review some of them. $25. Even this one, PFE. T. Let's look at it. PFE. PFE. So the same style. What's going on here? What of the BAC? Should be network. Needs to come up. So, ladies and gentlemen, we will make money if you can pay attention and follow simple instruction. There's so much money flying every day, everywhere. So I was telling somebody the other time, if people can be trading stock and making a lot of money, so what is your excuse? I don't know if you understand. What then is your excuse? You have no excuse at all. People are making money trading stock. Then cryptos will be fast. See, this is PFE. Yeah, so this one on New York Stock Exchange. Let's go. Oh. Hmm. So this stock have been rocking down and still having a very much resistance. So what do we do? We just have a break of structure here. So this is a dealing range, for instance. This is the high, and it has another low here. So let's just pick all of these. So this is a recent high, but this has actually broken it. So what's going on here? Has it been broken? No. This is the main high. It has not, it's only swept. And so that's a very big concern. It's only swept. Let me just go back to BAC, Bank of America. Wow. Wow. So Bank of America, wow. It's a break of structure. It's a break of structure. Man, Bank of America. Wow. It's just taking out 2006 high in 2006. So I think this is the global financial crisis of 2020, 2008. Now rocking to 2009, Bank of America collapsed down to $2 from all-time high of $56. Crashed down within 2007, 2008, and within that 2008, massive crash. People ran away, but that is the buying time. And since then, it has been flying. So we're just cropping into it look more not too attractive for me now. So when we see stock like this, we rather want to wait for a beautiful pullback. So let me look at that Cisco, CSCO. Nasdaq is a tech company. I did CCMP, CCNA. Oh, what's this, man? Just see recent break of structure. Let me look at daily. Okay, so on daily for the people who are trading, let's look at it. I think this is a swing low. So it actually came to 50%. So let me look at 4 hours. Oh, wow. That was a very beautiful daily buy. You see that? Even with a gap here, but there was level of support here. Look at power of 3 here. So that means on 18, 19. So that's on Thursday. That would have been a very wonderful stock to pick. And targeting this high. So probably if you enter, will still be holding. Yeah, because even if you are targeting 5%, will still be holding. But you are in profit holding it. I think that was beautiful. Don't worry, or by next week we have a lot of review and all of that. There's so many stock so I just like the one that the prices are small so that This is Interactive Brokers Group Incorporation. IBKR. IBKR. Nasdaq. Mm. So let's go on daily because of not to waste too much time. And I think it's a very nice buy. But that was like some Monday. So this is a break. All of this. So this is wow. Hmm. My goodness. Jesus Christ. From April, $32 to 60 something. That is 100%. It's a break of structure. So the market returned entirely back to the order block and demand zone. So this is power of three. You will have find an entry, power of three, targeting this. But it's slowing down again. Let's look at 4 hours. It's the same thing. You will have find an entry. Okay, so enough of that. Let's go to crypto. So just to tell you, it's the same pattern. I don't know how many of you bought into that worth. Let me even look at my words. Thank you for fighting my battle for me, Jehovah Olubeja. Oh my God. You have done me well, oh my soul. Rise up and praise the Lord. God is good. You have done me well, oh my soul. Rise up and praise the Lord. All right, so here is Ethereum. So forget all these things. So if you go on daily. So now one of the lovely thing about the crypto for you and me, and that's why I say maximize every opportunity, is just follow instruction. And if you follow the instruction, you are buying, you are selling. So imagine buying something both in sports and in futures. And in the futures, you are not going to be using more than 3x as a beginner. And that's an advantage for you and me. Okay. So let's look at the same thing. So it's purely in a downtrend. Purely in a what? A downtrend. So the breaking structures to the down. So we have the last break here. Now, this is the major high. So this is what we call a daily range. Let me do something that you're going to just love to understand. Lower to be. So here is a high, so the low. And so you can see a very nice rejection over here. Now there are several rejection, but so let me do something. Mm, 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 At our God, there is no holy as the Lord. There is no. All right, so let's go. There is none holy as the Lord. There is none beside thee. Okay, so let's just leave it. So let's take this now from high to the low. The market was now creating. So you expect the market to come. What happened here? The whole environment here is another block. This is a demand zone, and this is another block to this point. Olúwa, Olúwa wa, orúkọ rẹ̀ ti níyì tó ní gbogbo ayé. Orúkọ rẹ̀ ti níyì tó. Ọba tó ń ṣe ohun tẹ́nìkan ò lè ṣe. Ọba mi tó pa ejò lẹ́nu mọ́ o. Orúkọ rẹ̀ ti níyì tó Olúwa. Olúwa, Olúwa wa. Orúkọ rẹ̀ ti níyì tó ní gbogbo ayé. Orúkọ rẹ̀ ti níyì tó. To me. A new day, the day of joy. Sorry, I needed to close some trade. A new day, the Lord has given unto me. A new day, the day of joy. So now this is exactly what happened. You have marked this point as a reference point that eventually when the market come here, alash, you are getting into the market. So I think it's simple enough. Now, ordinarily, so this is another block. What we first see is a demand zone or supply zone. This is the confirm order block. So you can see some alignment here now. Now we have a fair value gap here. Very simple. Now, this is Ethereum. So one of the things is that even though it's risky, sometimes you want to trade a counter. What's a counter? Let's go. As the market travel down, back up, this is a swing high that created this low. But I haven't gotten to this point. What did market do? Let me show you internally. Yeah, this your two may not mark it. Some other two mark it. Look at this. Can you see something? So now, good and fine. This is a recognized low. Let me mark it this way. If you trade like this, if you invest like this, if you are building your money, your own is not to give yourself unnecessary stress. And that's why I analyze and most time I send in update. Now, the first entry can be this, from this low to this recognized high. Are you following now? All right. So here the market actually returned back to this 70 something. So in doing this now, I'll have to go to my lower time frame. So if you look at it where it came to, I'll go to 1 hour. This is, you are not scalping. This is crypto spot, and then to make money, buy and hold maybe for 1 day, 2 days, 1 week, and all of that. Here you come. The market, this move up is not your own. No, don't run after it. Wait for it to pull back. That's first one. The second one is that wait for a breakup structure. But remember, this is not your buying market. It's a counter you want to do. This is where your target is, and that's where delivery will be faster. But you are turned a counter, so you can't wait for all of this. So now, but if you go to a lower time frame, it will have changed. Now, so you can't use daily structure. But why you do this and you go to 1 hour? Because you're a spot trader. Now, I will tell you something very beautifully. So I haven't marked this point. Make a whole lot of sense that the market traveled down to this point. Apart from, I think I entered this trade, many enter with chart pattern. I don't use chart pattern to that extent. What is chart pattern here? Many of you will see it. What do you call this one? Inverse head and shoulder. Left shoulder, the head, the right shoulder. Now, sometimes you can see that this move up, if you're not smart, you are not going to catch up with this because that was an aggressive move away from there. Okay? But for you that know what you were doing, you will have traded this massively. Now, going back to 1 hour, when the market crashed down here, see what will have happened? What will have happened here was simple. Here, the market continuing to do all the whatever, and now created a high here, and the low here. So if you want to draft down so much to see it more internally, you're not going to use all of this. So you're going to see this is a high, right? Okay, yeah. So here, this is the lowest. So this is the lowest. So this is a high. I think there's a break of structure there. Now, so you want a pullback of this market to a reference point. The unfortunate thing is that you didn't have any good reference point here. There has to be another block, fair value gap and all of that. Do you have whatever? No, you don't have. Instead, was playing out from up. So you want to have. So probably you could go to 30 minutes. So going back to 30 minutes, do we have similar thing? Now you can call this totally the total breakup structure here. So where was the high that brought about that? Inside here. So we have a very powerful one here. So 30 minutes gave you what you're looking for. So the whole thing here, you can just corroborate all of this here, from here to here, as a fair value, as another block. Yeah, so just to find a quick entry. So are you a spot trader? So you do not have any problem. Now, so breaking out of this point, a retest of it was this power of 3. So some wait for this candle to close. Felix, don't wait for that. Remember, you are trading a counter, and here, the close of this candle, the stop loss has to be below here. This is spot trading. 4% is what you are going to lose, or let's say 5% should the trade go wrong. It's spot. So if you put $100, 4% is $4. So if you put $1,000, 4% is $40. Now, this is not futures, this is spot. Remember, I'm on spot. I'm not training on futures. I'm trading spot, both stock and crypto. So if you're targeting 1:2 risk reward, so we'll say if it's capping, we'll say 5%. That means even before 1:, because this is 5%, so it can be 1:1, I've already done 5%. But so let's say you're targeting 1:2. 1:2 is going to give you 8 point something percent. Sometime you target high here. It's going to give you 6%. So if you target this high, there are so many things you can target, right? So you see the market actually travel to this high. Are you getting it now? So actually travel to that high. That's about 13%. Now, good and fine. Oh, it has traveled to that high and gave you this. See what happened. You have made this profit. See market crash. When this market was crashing, you don't need to fear. Let me tell you why. Let me take you there. This is what happened. Why you will not fear that crash. Rather, you will prepare for it. Okay. So ultimately, this market, so that means Ethereum's supposed to crash to this other block and probably sweep this SI liquidity, which means you're looking at Ethereum to come back to $2,000. Oh, yes. So now, what's the point? The point here is that on 1 hour time, on daily time frame. So as a spot trader. So as a future trader, you want to actually trade. You can scalp those of you who know what you are doing. But you want to trade as a future trader, you want to trade in the direction of the trend. And what's this trend? This trend is downtrend. Very simple. All right, so now if that is the case, let's look at something that was going to be more marvelous. When the market is on daily time frame, this is a low, this is a high. So when the market created this high, what were you looking for? Your own look is that, okay, let me show you. No, I don't want to have this 30. Take out this 32. It is when you are following a trend that you use it. It's only small time frame, lower time frame is scalping. So now this is your reference point. Let's go. Man, step, koskoto, lekapati. Do you get it now? This is your fib reference point. And now outside that of your fib reference point, ladies and gentlemen, this is your order block. You right? Good. So your fib, your order block. However, you've gotten this, you have marked it, you have identified it. Now, remember, if you go to 4 hours, you're going to get another opportunity, and that opportunity is this. Another opportunity on your 4 hours, even before you go to 1 hour that you travel to, is that this is a break, structure break, structure break, structure break. So that means this is a high. You want this high to be taken before you can take an entry. Market that's not your own. So if you look at 4 hours ordinarily, there is nothing you can do, even though it has been scaling. Oh, yes. Okay. You go to 1 hour because you just want to find a trade for that day. It was on 1 hour that we got what we got. Okay. Now, it was not properly refined. Yeah. Okay. It was not what? Properly refined. So, what then do I do, Felix? What you should do, you say go down, not to Egypt, but go down to 30 minutes. So you are an investor, so you don't have too much time to be revolving around the market. So it was when we came to 30 minutes. We find this. And what do we find? We got this breakup structure here. This is this. And this is the high that created that. Well, now look at it. Okay, fine. So what you did was to wait for this back to the other block. Does that make sense? And back to the other block, my power 3 form, no story. I mean, stop loss, no story, below everything. If you still travel to 15 minutes, you probably may find more refinement, but sometimes you are not a scalper. So you don't have those time, those energy are not there for you because after all, it may not be the only thing you do. So you don't have the damn time to struggle this. But if it's the same thing, you still find though on that 30 minutes. Here you find a breakup structure proper that you couldn't find or see properly. It's still the same thing you're doing. And then this is the high, right? Yes, so fantastic. The market break our structure. This is called market structure shift. Are you seeing that? This is called what? Market structure shift or change of character. Now, so the market returned back to the origin. We have a beautiful fair value gap. We have a liquidity here. Then we have the order block. Let me stretch it down. Now, this make more sense. Make more sense. So you have power of 3 here. Now, most sniper traders, if you are trading futures, when they see this power of 3, look at it. Now, their own entry, when they enter, they wouldn't, but you're a spot trader, you don't use their own. So when they see this power of 3, some wait for the close of it. Some, as this candle just close, is their own entry. The center candle closes. That's why it's breakout away. This is their own entry. Now, another concern here is that this is a fair value gap. So the candle that caused this fair value gap is this. Ideally, your stop loss should be below you. So invariably, it's below everything here. Now, but sniper entry traders reduce their stop loss here. You know you're a future trader, then they only target 1:2 risk reward. So 1:2 risk reward will have been, so they use like 50x, or I don't know, if you use 50x, this one now, though they are very sure of themselves, so they have to refine. So let's say he used 20x. This is 2.9. So 20 times almost 3, like 60% is done immediately. Now you're a spot trader, you don't have all those time. Protect it. 3% is what you are going to lose if the trade invalidated. This is spot. No time. You don't have time to be watching the market. You enter your market and go to bed. So 3%. Now 1:2 risk reward. This is already too much. 1:2. Look at it. Targeting that high. That's about 6%. This can be completed as fast as possible. Take a look. Take a look. Now, so the spot trading, which I'm still going to be giving us the power of DCA. So if you are going to be getting this point, so that's a massive 14%. That's what? A massive 14%. Now, this is the question. When the market, even when you forget, that's the advantage of the spot now. When this market was crashing down, are you supposed to be afraid? No. Why not be afraid? Okay. I don't need to be afraid because at this time I'm looking at the market to come back to this, my daily time frame order block. And I think, what do we mark here? We'll mark something. Anyway, this is a reference point. Okay, that's Fibonacci retracement. Okay, yes. Now, go back there. Are you seeing something? So let's go back there. The market has traveled back to the point. My entry model is swing low, swing point. Now, all of this has not given me, but this is an engulfing, but it didn't close engulf this. So this is my entry, power of 3. Stop loss below the total swing. Then there we go. You know you're a spot trader. So now, if you look at what you were doing here as a spot trader, you are adding more positions. You are doing what? You are adding more position. Now, somebody is going to be looking for entry at the neckline. Okay, this is just 1 point something percent. Somebody is going to be waiting for an entry at the neckline of the inverse head and shoulder. It's not your own. You see something? So what is going to happen here? The new entry. Now, in my Fibonacci retracement trading, my first target is usually this when I mark it. And I will explain to you in some of the training. If it goes there, that's 16%. The second point is this. If it goes there, that's 21%. You hear me right? That is 21%. Beautiful 21%. Oh, yes. Beautiful 21%. So if that is the case, so if beautiful 21% is set, what happened here? This is what we call reference point. You must understand what now happened at the reference point. You remember when you go back to the daily, you now knew what was happening here. This is a point you have marked as a reference point. So this is a liquidity, and it further creates another liquidity and get it swept. Those people are trading futures. Now, the question you ask yourself is that why will this market get here and now sell down? It sell down because that's a rejection zone that you were expecting ordinarily. So here, what happened here is that this is a sweep of liquidity. Okay? So on 4 hours. But outside that in 4 hours, because that's come to inside a reference point. So I'm going to go back to 1 hour, 30 minutes, 15 minutes, just to find a narrative. Now, so this is what I'm doing now. We that are trading spot is not our business. We're only waiting before we can buy. But those that are trading futures is their business because they trade up and down. They buy and sell. Now, for the man who buy and sell, to look at it, back to that reference point, it's still a sweep. It's still what? A sweep. On 30 minutes, it's still a sweep. So what some are waiting for here are rejection. And this is the extreme reference point. What do I mean? It went so high there. Now, on 15 minutes, if you could not find an entry on time, because here the market is the external structure, here, continue here. So this is the break. You expect the market to return back, perhaps oh, sorry. Why will I expect the market to return when it's already a rejection point? I don't know if you understand. And so for you, a sweep and return back to the region is your entry. You are shorting, but some wait for confirmation. And of course, if I go to check anywhere, I see my power of 3, I'm going to take my trade. This is the simplest way. Now, I call out so many coins. So look at Wetcoin for those who bought into Wetcoin. That was a good one. Right? Wetcoin. That was a good one. Look at it. So Wetcoin now is to break this 34 cent and to continue the journey up. There are so many factors and permutation that cause you broke down, turn, and all of that. ZEC, the same thing. So, ladies and gentlemen, trading our sports, it's a combination of trading stock and crypto. And so if people can be making those percentage on stocks, then how much more crypto? I hope this helped you. So thank you very much. If you have any question, you can always ask and you'll be directed and put through appropriately. Bye for now.